Hey guys, welcome to Investors Chit Chat. In this video, we'll compare different CFD brokers. I'll show you the different costs that you'll incur as part of your trading with these brokers. To preface this, I don't trade futures, options, or forex. This is purely based on equity. Also, please note that if you're trading from a country other than Australia, the commissions and rates will be different to what I'm going to show you. Please take a moment, pause this video, and read through the disclaimer. I have considered these top 5 low cost brokers for this analysis. There are more brokers available to be considered than what you are seeing here. I have gone through the process of elimination based on their platform, instruments available to trade, and their cost. As you can see from the list below, I am biased towards the DMA brokers. There are multiple reasons why I like DMA brokers. Primarily, the reason being your order can be directly executed into the exchange order book. While with non-DMA brokers like market makers ECN and STI, they can manipulate the market and add spread to your underlying share price. Therefore, your broker's source of income is apart from the commission and the interest rate that he charges, it's also the spread on the equity that you are trading. So I have personally opened account with these brokers in the past with the intention of trading. I have moved on as either I found cheaper broker or the broker that has some shortcomings for my trading. Not all brokers will offer complete functionality that we need as a trader. There will always be some level of compromise irrespective of the broker that we choose. So what you have here is a table that shows different commissions and the finance and the spreads that each of the brokers charges, and also there are other costs associated with them. If you look closely, there are three major areas that the brokers generate commission. One is the base commission. The first column is the base commission, and the second one is the overnight finance, and the third is the spread. That's where I would say they make the major chunk of their revenue or profit. For instance, in IG market, you have the base commission as $7 and a commission rate as 0.08%. If you decide to trade a particular order and if your order does not generate a minimum of $7 as a commission using commission rate, then the minimum commission that you will end up paying is $7. So basically, anything less than $7, you have to pay a minimum of $7. Overnight financing is interest that brokers charge to you if you hold your position overnight. If you're a day trader, this really does not apply to you because you are basically closing your trades during the day or before the market closes for the day. If you are a swing trader like me, where I keep my positions open for weeks together, then this is something that I would suggest you to pay very close attention to. So basically, when we place our CFD trade, we are using leverage. This means that someone on the other side of this trade is lending us the money to be able to trade. But one thing that annoys me is that brokers, when they actually calculate the overnight finance rate, they don't deduct the deposit that we give as part of the trade. They will charge the interest for the whole trade position. So as you can see, the overnight financing has two components. One is the currency spread itself, and also the other one is the interbank rate or the RBA rate, based on the which broker we are looking at. I would say currency spread is the lever that these brokers use in order to pass on their costs and also for an additional source of income. So further down the video, we'll have a look at the impact this overnight finance has as part of our trading cost. The other component, the third component that I was mentioning was the spread itself. The spread by itself is nothing but brokers adding additional points on top of the bid and ask price. Thereby, when you're trading, you're not really trading the underlying share price. So if you look at the top three brokers, which are IG Markets, Invest Global, and Interactive Brokers, because they are all DMA brokers, there is no spread applicable to them. Whereas the bottom two ones, which is the Trade Direct 365 and the CMC Market, are non-DMA brokers, and they do apply certain amount of spread on top of the instrument that you want to trade. In case of Trade Direct 365, they apply a fixed 7 bps per side, which is far better than the CMC Market, because CMC Market applies a variable rate which is depends on the instrument you're trading and also the market conditions. Other pass on costs that they do transfer you when you want to trade are the platform fee or the minimum brokerage charges, and also there is this ASX data fee. Some of the brokers build or purchase their own platforms, while some brokers have a tie up with third party providers. For instance, if you look at Invest Global, they provide a platform called IRS to do your share trading, which is the same platform. If you go for Comsec Pro, they also provide the same IRS platform. But the cost of that platform is significantly higher compared to any other platforms. They charge you around $50 per month as part of the platform fee. On top of that, you also have a ASX data fee, which is $20 per month. So in total, it's $70 per month as a monthly cost. But these costs are refundable in almost all the cases for with all the brokers. So for Invest Global, if you are able to trade around 5 trades per month, they will refund you the monthly fee of $70. It works slightly different in the case of interactive brokers. They don't charge you a platform fee per se, but they would charge you the minimum brokerage fee that you need to generate per month. If you have not generated $10 brokerage fee in a month, whatever is the difference, that difference of the brokerage that you have generated will be charged to your account. They also provide you a ASX data fee subscription, which is $25 per month, which is non-refundable. In order to meet the minimum brokerage charge, you need to do at least 3 trades with interactive brokers. So one thing that you need to understand is with some of the brokers, you won't be able to trade without a active subscription. So you need the data subscription. That means that you need to do a minimum trades to be able to get your refund back. In the case of IG markets, you would be able to place your trades with the broker without having a data subscription. So in case of some brokers like interactive brokers and IG markets, you don't really need a data subscription, but you should be able to do your trading via, because they provide you derived pricing for most of the exchanges. This allows us to view the real time share prices without paying for the data subscription itself. Basically, with all this information, we need to know how much does it cost to trade with each of these brokers. I have done my calculation using two scenarios, one where the average trade size is kept at $5,000 and the other one where the average trade size is kept at $15,000. And for the sake of simplicity, let's assume that we are fully invested for the throughout the year. As you can see from the list below, the breakdown charges of each of those brokers and also who is the cheapest of all the brokers. And it stands out as the interactive broker is the cheapest of all the brokers. There are pros and cons to trade with interactive brokers that I will explain later. If you are a serious trader and hold your position overnight, then you need to give a bit more weightage to the interest rate, considering as it's 3 to 4 times more expensive than the commission itself. From the initial glance on the table, it looks like TradeDirect 365 is the second cheapest broker that you can opt for, which is only 17% more expensive than interactive brokers. One thing I have to mention here is that I have not included the spread charges that non-DMA brokers like TradeDirect 365 and CMC Market charges. And thus, I would say that TradeDirect 365 is a bit more expensive than what you're seeing on the screen here. The calculations get a bit more complex if I start including the spread cost, but for the sake of assumption, if we include that 7 bps spread in TradeDirect 365, then it will become way more expensive than Invest Global. So clearly, in these scenarios, you could see that DMA brokers seems to be much more cheaper than non-DMA brokers. To some extent, we'll be able to derive the cost with TradeDirect 365, but with CMC markets, it's quite impossible because their spread is variable based on the instrument that you're trading and also the market condition. That is why I always prefer to go with a DMA broker. Let's test these brokers with our other scenarios where the average trade size is $15,000, which is 3 times more than the previous scenario. By increasing the trade size, we are moving away from minimum commission charge to commission rate. On the top row, as you can see, the different commission rates that each of those brokers would charge you. For example, IG market charges 0.08% and the lowest being the interactive brokers at 0.05%. In here, clearly again the winner comes out to be the interactive brokers with $5,250 total commission that you pay in a year. In here, it is clearly obvious that TradeDirect 365 could not hold against Invest brokers because of the 1.01% commission difference and also the change in the interest rate. Also, if you observe all the interest rates that you are seeing, the amount of interest that you pay throughout the year is 3 times more than the brokerage commission itself. So that's why I keep insisting on looking for the interest rates that each of these brokers would charge us. Out of all these, the most expensive seems to be CMC market even before we add their spread. And the last row tells how much percentage these brokers are expensive compared to the cheapest broker that is available. To conclude this video, Interactive Broker comes as the winner for the low cost broker. Just letting you know, this video is not sponsored by them, nor do I have any affiliation with them. Right now, currently I am trading with Interactive Brokers. As I was mentioning right in the beginning, not all brokers offer everything that we need as a trader. Same applies to interactive brokers as well. The biggest disappointment that I have with interactive brokers is the number of instruments that they offer us for short selling. It is quite low compared to any of other brokers like IG markets. One thing that you need to consider based on your trading strategy is whatever the broker is offering, does it really fit your trading plan? Apart from cost of the broker, you also need to consider whether whatever functionality that he is offering, does it really align with your trading strategy? Sometimes you're better off choosing a broker even if it's a bit more expensive, but that complements your trading strategy. Also, if you leave your choice of broker in the comments below, I will try to include that broker in my future comparison. If you do not want to miss any of the future videos that I make on personal finance and investing, please subscribe and like this video.